Hey everyone, me Kevin here. Welcome into, Sunday, 3 p.m. California time, 6 p.m. Eastern time. Stock futures have opened, and I always like taking a peek, seeing, okay, what do we got on the calendar this week? Sunday's a great time to do it. It's pretty chill. We can take a look at futures, though futures don't necessarily predict what's actually going to happen. They can be a nice little suggestion to look at. We got a futures up right here. We're so far green on futures. Dow, NASDAQ 100, and the S&P and NASDAQ actually up about 0.25% here, with Dow roughly flat. And we've got some big, some earnings coming up this week. It's not too busy of an earnings week, kind of getting to the end of earnings season. But another thing we can do is kind of take a peek and see, all right, what kind of stocks are looking kind of cheap right now? Where might we be able to find a little bit of value? So futures right now, we'll let those mature a little bit. Sometimes they're very volatile in the first few minutes of futures trading. So we'll see how futures go. Let's, for right now, though, hop on over and look at the earnings calendar. Keep in mind, this, by the way, is the To the Moon hoodie that we're wearing right now. So we got the To the Moon rocket ship. Anyway, you can see those in the merch shelf down below, or go to metkevin.com/merch. All right, let's look at the earnings calendar. So this is brought to us by Earnings Whispers. You sign up to their newsletter, you get this. Not sponsored. Just thought I'd say it. But anyway, of the things coming up this week, if I try to point out just some of my favorites, I have to say Lennar is going to be really interesting after the close on Tuesday, because lumber prices have been like 3x since, over this pandemic. So it'll be really interesting to see how the real estate sector handles these, Lennar being obviously home builder, handles this massive increase in not only lumber prices, but copper prices, sheet metal prices. We got fuel cell before the earnings, or before the market opens on Tuesday. Personally, Desktop Metals, out of the ones over here on the left, is one I recognize as one that I think will probably track when the market opens. This is one there are a lot of people bullish on. Cintas over here. We got Gevo. This is another one. Look, and Sundial on Wednesday. That'll be interesting. And Lordstown, too, especially after that Hindenburg short seller hit piece we got. So we've got some entertainment coming up this week. But I have to say, Gevo's been one that's just been on a tear since one of their executives basically got a seat on Biden's Science Council. Whew! That was like a big nod to biofuels right there. And there's a lot of excitement around Gevo. Gevo, of course, sells biofuels to like airlines, like Delta, for example. It's very expensive, though. So I think really once Gevo gets these costs down, maybe we'll be able to see some more biofuel attention. We've got Nike and FedEx on Thursday. Those will be fascinating to take a peek at as well. I definitely want to see the forward guidance of Nike. The reason I want to see potential guidance over here on Nike is I want to see what. Oh, and Canadian Solar's over here too. This is one that I want to analyze before Thursday. We'll see if I can make that happen. But the reason I want to watch Nike before or their forecast on Thursday is, to me, it's going to be a really good tell to see how much are people potentially, or how much is Nike expecting that people are going to spend in this reopening. Remember, we're now getting into this reopening phase, like officially, right? Especially with vaccination happening. We're really getting into this reopening phase. And I think, honestly, at least in my opinion, they can stop. You just distracted me with the comments here. It's hilarious. But, there are a lot of people, in my opinion, who have put off buying clothing because we're just hanging out at home all the time. Not everyone, obviously, but a whole lot of people are. And I wouldn't be surprised if people who are, going back out are actually open to, hey, let's get a new wardrobe. Let's spend again. Let's go work out outside again. Let's work out at the gym again. And who knows, maybe a lot of people are already doing that. I imagine that'll step up with vaccinations, obviously. But Nike's guidance on that could be a big tell. And it'll be interesting to see the things that I would look for. Are they expecting a short-term bump because of maybe stimmy? This could be like an early, obviously it's very, very loose, but it could be an early indication of how Nike views the consumer. Are they seeing website traffic go up? Remember, when they do their earnings call, they'll be able to talk about movements in their inventory this week, as long as they get asked the question in earnings, right? Like, hey, how have your sales been since the stimmy checks have been coming out right now? And I wouldn't be surprised if that gets brought up because it could be an early tell of not only consumers' desire to spend, but does Nike expect that desire to spend to be temporary or something more long-lasting? Temporary is expected. Long-lasting is something where usually we want to be a little bit more watchful of the potential for inflation, right? So, yeah, I don't other than like the merch, I don't think that I've bought much clothing at all during this pandemic. Like the clothing budget has plummeted. Which, hey, it's a good thing. I mean, more money for the stocks, right? I do notice here we've got Crowdstrike reporting as well. So this could be another one to watch out for. We've actually got hims, hers. We've actually got the more I look at this, the more there are actually some interesting earnings that are going to be coming up, starting with Desktop Metal tomorrow. So we'll definitely want to watch these earnings. But let's take a quick peek. We don't have the sticks for what's to come or sort of what the market is doing. We do have futures, which futures again trying to find sort of some stability here. Oops, that's definitely the wrong button here. There we go. Okay, so the Dow, still about flat. S&P 500 and the NASDAQ 100 is slightly under 0.25% up. And again, it's just a suggestion. We'll see how things develop. But there are two things that I want to look at. I want to look at the sticks just to see what's going into the week a little on the cheap side. But it's also useful to look at the economic calendar just to see what kind of data we might be expecting this week. So let's pull up the eco calendar first, and then we'll look at the sticks. So if we pull up the eco calendar, this is what we get. We get some manufacturing data tomorrow. So we are expecting a reading of 14.5. I think this is the New York Fed puts this together, Empire Manufacturing, so manufacturing index. This one's been going up for quite a while. Retail sales, excluding automotive and probably with. Sorry, excuse me there. So industrial production. Let's see here February's numbers for retail sales and industrial production. Those retail sales, we want to watch those retail sales numbers. We really want to see a push. So let's look, for example, retail month over month. What do we got here? So these are our retail sales. The latest came in at a reading of 5.2. I'm trying to see if I could find the expectation that we've got here. Let me go back to the prior window here. Retail sales expected survey so I'm wondering if they're actually thinking we might go down about 0.5% as the expectation. So obviously if we beat that could be good, especially since we had a 5.3% bump in retail sales in the prior. Industrial production also expecting potentially a tiny little bit of a slowdown here. So we'll see how that goes from the prior release. Hopefully we get that bump. Mortgage applications, we'll get a report over here. This will be, so let's see, the 15th was, so tomorrow on Monday, we're going to get some manufacturing data. On Tuesday, we're going to get retail sales data. On Wednesday, we are going to get real estate housing starts. That's big. And we're also going to get the Federal Reserve talking this week. That's always big. And talking to Jerome Powell or listening to Jerome Powell is something that investors listen to every freaking word this guy says. So it looks like that's going to be the 17th. I'm getting a little lost with my dates here, but I think that's the 17th is Wednesday. Okay. So Wednesday, the 17th, we'll get housing data. It'll be a busy day. Housing data and Jerome Powell. Obviously, we expect them to keep rates stable. We expect them to keep bond purchases stable at about $120 billion per month, but we might actually hear from them about what do we got? The expiration of the standard leverage ratio. That could be interesting. The SLR. That expiration is at the end of the month. This would be the perfect meeting for them to talk about. That would be the perfect meeting. So that could be a big day. And if they come out and say, hey, we're going to let banks keep more of their capital on hand, we're going to extend some of the CARES Act benefits to the bonds market so that way yields stay a little bit more controlled, it could be a very good day for stocks if we get some kind of announcement like that. No guarantees we will. And if we don't get an announcement like that, the market could turn red. So there might be a buying opportunity. So if come Wednesday, we have a red market, or let's say we have a green market all the way up to Wednesday and we don't have any deals. And then Wednesday, they don't say anything and they don't make any kind of decision on bonds. They kind of leave it towards the end of the month. Might see some red. We'll see. Okay, consumer comfort on the 18th, which is Thursday. I think that's about it for the calendar right here. So, yeah, that's about it for the week here. So we got some big numbers coming out this week, and we also got the Fed talking. That's always very, very important to see the Fed chatting as well, especially since really the bond market has been so lately. And I am kind of tired of hearing about the bond yields because I think really generally you don't see stocks correlates so strongly to bond yields like we've seen. And we see it come in weird patterns. We've seen bond yields go up quickly and then tech stocks sell off. But then look at Friday, right? Friday, they worked as expected in the morning, but the rest of the day both went up. Bond yields went up and stocks went up. We've got Yellen saying that U.S. inflation risk remains small, manageable. Treasury Secretary Yellen said U.S. inflation risks remain subdued as the Biden administration pumps $1.9 trillion of relief into the economy. And this was on ABC's This Week, which means that happened today. Now, keep in mind, it takes time for this money to get out. Right? Even some of the money is still left over from the prior CARES Act deals. So it does take some money it takes some time rather for this money to get out. We have the Dow roughly flat right now, actually down about 0.1%. I'm sorry, 0.01%. There we go, barely down. We're down 3 points on the Dow right now on futures. The S&P 500 went from being 0.25% in the green to only being up about 0.1%. So shaved down a little bit here on futures. So moving on, as attention turns to Biden's infrastructure boost, Yellen said, we haven't decided yet whether to pursue the kind of wealth tax supported by a number of progressive senators. That'll be interesting. Let me lower this fan here really quick. It's driving me nuts. Okay, give me 1 second here. And, that's so much better. Get rid of that noise. Noise is toxic. Anyway, so let's take a peek at the sticks in just one moment. We got Stripe, by the way, raising $600 million at a valuation of $95 billion. I'm pretty sure that makes them the most expensive private company that exists, which is fascinating because I'm pretty sure Robinhood just raised money at a valuation of somewhere around $40 billion. Robinhood's obviously considering going public soon, possibly even sooner than expected. They initially thought that they would delay. And so a Stripe valuation at $95 billion, whew, that is a pricey company. You get a lot of high earning tech. My guess, a lot of high earning tech individuals diving into Stripe because everybody loves Stripe. It feels like. Look at gold. Funds reduce bullish gold wagers for 6th straight week. Big outflows here on gold. Probably have to talk to Peter Schiff about what's going on over here. So, okay, what else here? Fed to hike rates in 2023, but dots won't show it, economists say. Interesting. Strong recovery from the COVID-19 recession is likely to prompt Fed Chair Jerome Powell to lift rates in 2023. But that isn't going to show up in their forecasts this week, a survey showed. Oh, that's interesting. Because remember, the Fed projects when they're going to increase interest rates. And they do that with something called dot plot, where they show where their opinion is. Where should rates be in 2021? They all say 0. What about 2022? They all say 0. What about 2023? There's like one of them that'll say they should be, up. Maybe a couple of them say they should be like 0.5% or 1%. And it really isn't until 2023 and beyond that we start seeing more of the dots indicating, okay, rates should go up. But the problem is they stop measuring it at 2024 and then they just say beyond. And everyone thinks the long run interest rate or discount rate at the Fed should be somewhere around that 2.5% range. So this is interesting. So there's a survey here. And there are two things too. There's the Fed funds rate and there's the discount rate, but I'm not going to get, we're not going to go into the differences on those here. So anyway, economists surveyed by Bloomberg News see 2 quarter-point hikes in 2023. This is interesting. So Bloomberg did a survey and basically said, you should absolutely take advantage of the 38% off coupon code link down below, which expires tomorrow, to join Kevin and his programs on building wealth from real estate to stocks to property management, sales, and making YouTube videos. Check those out down below. Coupon code is HODL and expires tomorrow. Sorry, what was the Bloomberg survey again? Economists surveyed by Bloomberg News see 2 hikes in 2023. But they also expect the U.S. Central Bank's own forecast, released at the same time as its policy statement, to show holding rates near zero throughout the year. So let's break that down for a moment. Basically, what you've got economists saying the Fed is going to tell you they're not going to raise rates until 2023. But we think they're going to raise rates in 2023, at least 2 times. Which would take us from, instead of 0 to 0.25, we'd go to 0.25 to 0.5, and then we go to 0.5 to 0.75. That would be the range we would end up in, 0.5 to 0.75. And so this is interesting because the Fed is literally saying, the Fed has said this so many times, the Fed and Jerome Powell, they're literally begging us, like shaking us and grabbing us by the throat, going, yo, we've said time and time again, we will let you know well in advance of any changes if we start slowing our bond purchases or thinking about raising rates. The economists here are like, sure. You say you're not going to raise rates in 2023. We think they're going to raise rates in 2023. Okay, all right. Let's keep going here with the survey here. All right, let's see here. Okay, let's see here. Powerful trio. The Fed is now probing the unknown as a powerful trio of massive fiscal stimulus, monetary support, and pent-up demand impact the economy. Yeah. Ooh. So the trio they're talking about here is, here's stimulus from Congress, $1.9 trillion, plus the infrastructure money. Second part of the trio is the Fed buying $120 billion worth of bonds every month, which does obviously have the impact of keeping rates lower. And this pent-up demand that could come out of its shell, so to speak, when we open up. Obviously, they reiterate, oh yeah, here's the forecast of the survey. So this is the survey. So no economist actually believes that rates will go up by the end of 2023. I'm sorry, by the end of 2022. But 2023 is the year where people are thinking, that's where the Fed's probably going to U-turn. All right, and what else do we have here? A Fed stays easy, okay. Core inflation target, GDP growth, okay. So most economists don't expect the March FOMC statement to change very much. Yeah, I don't think any of us really expect them to change anything very much. But we are curious as to what they're going to do with those liquidity reserve ratios. And we do not have an answer on that yet, obviously. We actually didn't even have a prediction here from Bloomberg. Okay, let's go ahead and look at the sticks here just to see what's potentially starting to look a little sheepish. And I have to say right now, we've got a little bit, before we jump to that, just want to mention we do have a little bit of a slowdown here in futures. Take a look at futures, slowly starting to trend down. Not sponsored, but this is the investing.com app here. It's pretty good for looking at futures here. We've got the Dow down about 0.04%. We've got the S&P 500 was up 0.25%. It is now only up 0.5%. So it's up 2 points. And we've got the NASDAQ 100 actually up the most. So this is somewhat implying maybe a little bit of a recovery sell-off and maybe a green open attack. I don't know. We'll see. And again, this is all just a suggestion when we're looking at futures. It's way too early to tell. So we'll see here. And they keep flipping here rather between green and red. At least the Dow does. So we'll see what happens. Okay, let's jump on over to the sticks here. And let's see how things ended off on Friday. You know, Saturday comes in between and you kind of forget what happened in the sticks. All righty, let's see what we got here. So after hours, let's sort by the after hours here. We got our losers first here. So we got Express down after a 16.84% rally. We've got Open Door Tech at 26. That's probably roughly fair. You know, maybe up to 30 is fair for Open Door. Fuel Cell Energy down just under 18. Nikola. Is anybody here actually investing in Nikola? Nikola down both in the day and after hours a tiny little bit. We've got API at just about $65. Here's Gevo, gained about 4.5%, 4.6% on Friday, down slightly in the after hours. Not a lot of red in the after hours, the way we finished the day off on Friday. We've got Tilray was about 0.5%, Carvana down 0.5%. A little bit of a sell-off that we kind of saw right before the closing. Who knows? Sometimes this is just a way to have that cash ready to deploy again on Monday. So sometimes you see this sort of red on Friday, and people just dump it right back in. One does not invest in Nikola. You gamble on Nikola. Okay, touche. Oh, man. Woo! That's a good one. Aurora Cannabis here, down about 0.5%, also down about 0.2% on the day. Cannabis not getting a lot of love here on what is this, Friday. Actually, really last week. I do want to point this out before we keep going with the sticks here. I got to ask you for a little bit of quick help. Would be freaking amazing. Take a look at this tweet I sent here. So I sent this tweet right here. Whom should we interview next on the YouTube channel? Just thank you for subscribing, of course. And then, I mentioned some topics here: Bitcoin, Tesla, CCIV, FRX, ARK Invest, and more topics, and YouTubers excited to chat and learn. But I also tagged some folks here. So if I could ask y'all for a favor and maybe shoot a retweet on this right here, I think we got a lot of tags in here. Kathy Wood, Elon Musk, Chamath, Ray Dalio, Charles over from Cardano, Jim Cramer, Pomp. I think it'd be awesome if we get some more retweets here. So at Real Meat Kevin here on Twitter, would love to get a little bit of support there, and we'll get our voice out there. Hopefully y'all, by the way, enjoyed the Lemonade interview this morning. I have to say, that Lemonade interview this morning reiterated my bullish thesis on Lemonade. Now, I still think the stock is a little pricey, but I have to say, that interview this morning really reiterated why I invested heavily in this company in the first place. Now, we were bag holders for a long time because we bought the darn thing at IPO at like $54 in the course when I sent out my alert for I'm buying Lemonade the first time. The thing went up on IPO day to like $90, and I'm like, no way, Jose. And then it fell promptly to like $49, $48. And it sat at $49, $48 for a while. And we were always like, man, when's Lemonade going to jump? When's it going to jump? And Lemonade was almost one of those where we're like, it was literally the dip that kept on dipping for a very long time there in the summer. And now Lemonade's $100. It's twice that position. Lemonade went up almost to $180 after the Motley Fool pumped them. I mean, we were literally going to the moon. That's why we got the sweater. To the moon. I should have a logo version for myself that has the logo a little higher, or I could just lower the camera. But anywho, okay, let's go back to the sticks here. I suppose Lemonade is part of the sticks, but hey, why not? All right, so where were we? Okay, looking at all sticks on the sticks here, we've got, so Gevo reports this week at about $10. Still a little rich for historic purposes, but it has sold off from about 15, 16 where it was earlier. So who knows? It's an opportunity. Let's see, Tilray reporting this week. I'm really expecting it to be a big catalyst, but we'll see. BNGO, we've got BNGO just under $10. Lots of the cannabis over here. Wayfair at $3.15, little pricey for me. Really like them, but a little pricey for me at $3.15, have to say. A Neo at $45. I don't think you can really go wrong with Neo at $45. I will say, I think that we need a back to the sticks transition or animation. Yeah, just like with a sound. But Neo, I have to say, was one of the like really hot YouTube stocks for a while where everybody's talking about Neo, and I'm like, I don't know, 45's better for buying this stock. Don't get too euphoric. And now we're at 45. So I in fairness, I have to highlight that here we are at 45, which is good. I can't say I first bought Neo when it was super cheap, but I did first buy Neo around 22. And I bought a good heavy chunk when I first opened my position on Neo. Here at 45, I think there's some good room here. Obviously, you can't count out Tesla. I feel like if you're buying NEO and the CCIVs, you got to be heavy on Tesla. I wouldn't invest in the other ones like the next Tesla without having actual Tesla shares as well. Personal opinion, obviously, not financial advice. I mean, look, I'm so dumb that I have to have a coffee cup that gives me instructions. See, drink coffee. And that's RuneScape. So anyway, keep that in mind. All right, what do we got over here? So Tesla's still under 700. Upwork has gotten beat down, but actually not as much as they used to be. Zach, about tonight's FRX club, he's been inviting other. No, I would love to do. Is that tonight? Look, I'll get on the Clubhouse. Let's see. What's his name? We need more loves and retweets. What's his Zach FRX? You say? Yeah, because FRX is another one that could be very interesting. Maybe if somebody could give me the full name, we can we'll send a tweet over here to FRX. But I think if I get top, maybe I should be able to see some kind of Zach tweet. I don't see one. Somebody will mention it. Anywho, so we'll come back to this. Okay, so what do we got here? Oh yeah, I wanted to look at Upwork here. So if we go to the day on Upwork, we're actually, I mean, look, we had a really nice sell-off here along with everything else. But okay, there we go. Thank you for that. I do want to talk about Upwork, but let's see here. What do we got? Zachary Targ. Okay, there we go. All right. So Clubhouse round 2 tonight. Oh, 9 p.m. Eastern. Oh, interesting. Well, here, retweet this. Would love to join. Same icon. Look for me there. There we go. Cool. We'll just send that. Share some love there if you want as well. Okay, so back to the sticks. Upwork really hasn't sold off nicely because I feel like it's a good company. I like Upwork. I don't have a big position in them. We just had earnings. I really just have to dive through their fundamentals. There's just only so much I can do on fundamentals, like before I lose my mind. But this is one that I'm just so excited about. I just got to bring myself to buy more. The first time I bought, I want to say it was like 31 or something like that. No, I don't know. Wasn't it? No, I bought Upwork before November, so it must have been before that. I'll have to check. But it wasn't like a really low in the summer or March period. Anyway, so but yeah, bullish on Upwork. Tesla, obviously bullish on Tesla here. I mean, look at this. We're under $700. We're well off peaks over here. The company just made over. I mean, when we're probably almost at. I mean, they've almost doubled their money on Bitcoin, right? We're well over $1 billion in gains. Absolutely an incredible move. Obviously, don't buy Tesla because it's got some Bitcoin. I wouldn't buy Tesla as a Bitcoin play, but love the company. And very bullish on the full self-driving. I have to say, the full self-driving is, whew, that's money. The more videos you watch on that, the more indoctrinated you get. You almost have to be careful. So, yeah, let's see here. Okay, let's see here. Okay, what do we got here? So, Microvision. Yeah, Microvision was up 17% on Friday with another 2% thereafter. We still don't have that catalyst of, they're going to get acquired. I know that's still a hope. And unfortunately, this stock trades a lot on that hopium of an acquisition. Okay, what else do we have here? EXPI. Somebody mentioned something really interesting. Somebody mentioned that with EXPI, and I want to check this, but that EXPI, one of the reasons they split is to essentially make it easier to give their employees, well, not really their employees, but their agents shares at lower prices. But they said that when their stock reached somewhere around $70 to $80. And we might head back to that again pretty soon. AMC and GME, it'll be really interesting to see how these guys operate this week. There is part of me that's nervous that at some point we could see a sort of a great deflation again at GameStop. But I have to say, this run has been much longer than the previous run. I mean, look at the previous run. The previous run, and not counting from it going from like $10 or $4 to $40, right? The big candlestick runs here. The big candlestick runs went from January 21st to the day after my birthday, January 29th. So we had about 8 to 9 days of run here. We have been running on this stock since about February 24th, which means we're almost at, I mean, we're at about a 3-week run right now. That's twice the run we previously had. That does make me a little nervous that we could have some red candles here in the future. I mean, but then again, look, if you had sold over here at 150, you would have missed out on some of these gains, which is unfortunate. But it's so hard to tell with GameStop because it behaves very strangely. There is also a lot of belief that people are going to plow into GameStop with more Bitcoin money. Or I should not say Bitcoin money. I should say stimulus money, right? We do have the stimulus coming. So, hey, giddy up, horsey. Not only should the CEO of GameStop take advantage of some capital, but it'd be great if we could actually have like the executives of GameStop. How about like some freaking PR, like do some PR and talk about what their plans are. I don't know. Seriously, which finance YouTuber will have the balls to tell me how to spend my damn $1,400? Easy. All in on Tesla. I did it. I said it. I had the balls to do it. It's not financial advice. I said it before in this video. I'm an idiot, but I said it. That's what I would do. Anywho, or you could go all in on GameStop. Yeah. All right. I mean, you can't argue with the returns here in the last few weeks. You can't do it. Xpeng sold off a little bit more than Neo. So potentially an opportunity still here at Xpeng. Matterport at 17 is okay. I prefer it under 16. FRX I think is cheap under 12. I'm not adding to it right now, but I might. We'll see. Affirm is pretty cheap. It's under IPO pricing, but the whole lending industry makes me a little bit more nervous. DoorDash, Enphase. Oh, Enphase is so cheap right now. Enphase at 165. I mean, obviously went down more during the crash, but still 165 on Enphase is pennies for the not only the potential of this company, but the margin this company generates. It's incredible. I will say we're about to go all red here on futures. Let's take a peek at this. Look at the futures here. We've got the Dow down almost 0.1%. We've literally swung a lot over the last 35 minutes here. I mean, we went from being up 0.25% to being flat, basically here, and trending down. So the only thing that's trying to stay green here is tech. But I mean, we're talking pennies. We're talking barely. It's pretty dang flat right now. Now, keep in mind, futures are just a suggestion. Just like this banner right here is a suggestion for you to take advantage of the coupon code that expires tomorrow. It gets you 38% off the amazing, phenomenal programs on building your wealth. Link down below. All right, so Palantir 27. Okay, here we go. So we're finally getting back to 30, right? I mean, this is something I feel like I've been talking about and sort of turning blue in the face about. Like, Palantir under 30 is a yes, in my opinion. Once you go over 30, starts getting a little dicey, in my opinion. I mean, that's where I would let my money run. The same is true of Churchill. Look, like CCFE, 30, 35, in that range, probably the max I would ever pay for it. Before the whole crash, like when CCIV went from 11 to 20 to 30 to 40, 50, 60, there were a lot of people saying, Kevin, should I buy CCIV now? And I regularly said, look, over 30, I don't know. I can't say yes. And so the fact that it's under 30 now, even with the valuation change for me, I like it. Under 30, I like this one a lot. I think there's a lot of potential as really a number 2 pure EV play. And personally, I'd rather have money in Churchill than money in Ford or GM. I mean, hate to say it. I think those are great companies too. And I'm not saying I wouldn't invest in them. It's just if I had to pick, I'd rather have CCAV. It's the same thing with people give me a lot of heat for the tattooed chef thing because I sold those shares on Feb 16, before the crash when I sold them at $24.50 or something like that. I have a little bit left, but that I can't get out of JP Morgan. But the point is, Tattooed Chef is not a company. I'm not a Tattooed Chef bear. I would just rather take that money and deploy it into some of these tech deals. I mean, in my opinion, it's stupid for me. I'm not talking about you. In my opinion, it's stupid for me not to double down and concentrate into my highest conviction plays. Not saying that I don't have conviction about Tattooed Chef. Anyway, clarity. So what else do we have here? CRISPR. I've been spending a lot of time educating myself on this, and I tell you, I am still too much of a freaking baby. Like, the more I learn, the more interested I am on this tech, but the more nervous I get that playing in the therapeutics is just an FDA lottery. Like, it's almost like if you're playing in the therapeutics, you have to just pick 20 companies and hope that one of them kills it, or even if 3 of them kill it, your entire portfolio will do okay. But like, could I go on heavy on one of these therapeutics? I'd probably be too nervous to just go heavy on one of the therapeutics. Like, I'd be happy going in heavy on some of the EV plays, but on therapeutics, I don't know. I'm still working on that, though. I mean, this is what I do, right? I sit around and I research and I read. I enjoy it. Okay, and then that's, of course, between sword fights with like Max or Jack wanting to wrestle and things like that. Okay, Fisker. We'll see if Fisker's able to do a run again. We had such an incredible run sort of in the middle of the crash here, in the middle of the storm. From the 24th through really about March 2nd there, we had an incredible run. And this stock really hit some highs. I mean, there was a point we hit a high of 31 or 32, almost $32 a share. Really was a nice swing trade there. So definitely some money to be made there. So watch that one as well for potential volatility here this week, which could be an opportunity to make some money. Disney at under 200, I like. It's not something I would go heavy in, but I like having exposure to some recovery, and Disney's my choice because I still get that, in my opinion, growth potential. It's not a company that's like a dying industry, right? It's not going to go away. It's a very high quality company that I like. Pinterest over 70. I mean, it's barely over 70, so it's okay. Starbucks, I've been out of this one for a while. Wrote it as a recovery play, made money, and got out. Let's see. Simon Property Group. Wow, Simon at 117. That's crazy. I remember we traded this one back in the summer, and we were writing this thing from like $49. Gosh, it's so weird looking back like a year ago, how low some of these things really were. Apple 121. We got Lemonade at 104. I mean, it's such a great company, but still, I will have to do, what I'll do is I'll compare Lemonade and Square, and I'll see which one I have to be more stretchy on. Because I will say, as much as I like Square, I have to be pretty stretchy on my numbers on Square. And I'm okay with that on a company like Square because I know they could just come out with new products like NFTs and just absolutely crush all of my expectations in terms of like outperforming my expectations. A company like like a food company, a low margin food company, it's going to be a lot harder to crush my expectations in my opinion. I could be wrong. We'll see. Okay, the God Pill says I did a 2-hour line and you donated $50. Interesting. You donated $50 to say that Tesla and Bitcoin are going to zero and why GME and AMC will go to the moon. Wow. Tesla and Bitcoin going to zero, but GME and AMC going to the moon. Well, I imagine you have an interesting argument there. 2 hours sounds a little long on the argument, but that's fascinating. Wonder if we can get a concise argument there, but might be worth looking at. So thank you. So 693 on Tesla. Look, under 700. Just give me more. What we need our music here. Here we go. Come on, push it. Find the dip. Find the dip. There we go. Love it. I did, in case you haven't heard, I did close out my position in EBIX. That was a day trade. Day trade turned swing trade. And that will lead to more profit on our swing trade spreadsheet that we have going in the course, which is cool. I think we're going to be, once I put in GameStop and EBIX, that'll put us around, 20K playing with about 30. It's not bad. Not bad. That's the anthem right there. Yeah. I don't have Jim Cramer's board up. I don't know. But I will say futures, I don't know. They're not holding up. Futures are just not holding up right now. Hopefully that's not indicative of a potential bloodbath again tomorrow. I don't know. Look at this. We've actually just had the S&P 500 and US Tech NASDAQ 100 flip. So I don't know. We'll see. We'll see. Again, futures are just a suggestion, right? So they're not. It's not like definitely that's what's going to end up happening. All right, so let's go jump over to top news here. Let's go see what we've got in top news over on the Bloomberg terminal here. So top news, and wait, we could transition with a bell. Now we'll try it. Let's see if it actually works if I do it right. If I push these buttons, I gotta push 3 buttons at a time. That was not bad. All right, so let's see. AstraZeneca's EU vaccine woes deepen on clots. Ooh, that's not good. Nobody wants blood clots. JP Morgan see error over timing of stimulus checks. Oh, the traditional ones here told customers they might not receive their stimulus money until Wednesday at the earliest, sparking backlash from consumers who were hoping to see their cash hit their account sooner. U.S. consumers have been eager to receive their $1,400 stimulus check. The IRS has said while the official payment date is Wednesday, March 17th, it has begun sending payments. Let's see here. Okay, Wells Fargo is saying it's coming out in multiple phases. JP Morgan says set up account alerts. I think most people are seeing a delay here. Yeah, this to me is, and we were talking about this earlier on the stimulus live stream. I personally think companies like Chime or these other smaller banks, maybe even PayPal, they're trying to gain customers by basically advancing the money and just making it available right away. And honestly, it's brilliant, exactly because of this kind of stuff that goes on here. And I tell you, I tweeted the other day that I think we need, JP Morgan needs to innovate. Otherwise, they're going to get replaced. The final nail in the coffin will be Bitcoin, is what I said. I tweeted that at Real Meat Kevin. Follow me there. And I believe it. They really have to innovate. Now they're screwed. They're stuck between a rock and a hard place on a lot of things, mostly because of the regulation that they face. Let me see if I can find it. Real Meat Kevin, JP Morgan, nail in coffin. See if that actually gets indexed. Oh, I think it is. Does it actually? Oh, no, it doesn't go to that. You'd think when it's here, it would link to that, but it doesn't. Oh, well. Yeah. Oh, well. All right. So let's see here. Okay. All right. So I think that about covers what we've got in the sticks. It covers what we've got here. Let's do one last look at futures. So let's jump on over to the futures chart. Futures now slightly negative here on the Dow, slightly green on the S&P and NASDAQ, probably waiting for some thoughts on bonds. So we'll see what happens here. I think Rocket will eventually go to 30, but probably not under this crazy inflation threat time. Interview Peter Thiel. I'd love to. Look, and he speaks German too. Well, da muss ich Deutsch sprechen mit ihm. Yeah, I mean, look, if you have a connection with these people, I'm game. Set it up. Let's do it. But yeah, I think that'd be a phenomenal interview. Palantir, golly, yeah. We'll have to see what kind of secrets we can get. So anyway, let's see here. Skills versus Palantir. Thank you for the $10.90 or 10.99 euro. How'd you say that? €10.99? 10.99 euro? I don't know. So you should start a contest for course members. Who can guess the S&P NASDAQ price at the end of Friday? Yeah, I don't know. It'd be like throwing darts, huh? Darts. How do you sign up for stock alerts? So it's the Stocks and Psychology of Money group when you go to meetkevin.teachable.com. Just make sure you use that coupon code that expires tomorrow. It's HODL, gets you 38% off. Would love to have you in the group. Remember, it comes with private live streams. Every day the market is open. And that's where we could do more direct Q&A, which is really useful. People break up kind of their life stories and their problems into small little bite-sized comments. So that way one person isn't taking like a lion's share of the time. We can really chat that way. Obviously, buy-sell alerts when I buy and sell things. And any insights or questions that you might have. All of the courses come with the private live streams, since there are many live streams. A lot of people like to bundle up. You get a good deal if you bundle up. And yeah, there you have it. So check it out down below. The stocks course is the best investment you'll make in 2020. Well, I appreciate that. That's really nice of you to say. That's flattering. Keep in mind, a lot of people are writing this off on their taxes. They're so like if you got another 25% off on top of 38% off, it's just a bargain. They're writing it off against their stock gains, for example. But you have to verify that yourself. I'm a dude wearing a rocket to the moon emoji on YouTube here. So anyway, thank you so much for being here, folks. We'll see you